Kia ora, good morning. It is Monday, and it is good to be back in the Kiwibank Wellington dealing room. I'm not going to be in here every day, I guess, to be fair. We've all got a new normal. Anyway, I am Mike from Markets. This is Kiwibank Markets in a minute. Yeah, it's been a while since our last one of these, or maybe this is your first time here. Welcome, if so. But as a quick refresher, bit rusty, or introduction, I'm going to talk for way more than a minute about some stuff that happened in the financial markets over the weekend, overnight. Yeah, maybe a tangent or two as well. Good times. Okay, so kicking things off with the NZD, New Zealand dollar, it's lower. Decent whack lower, actually. We shut up shop on Friday night, trading at around the US 60 cent mark, and officially closed on Saturday morning at around 59.3 US cents. About 1% fall. Decent fall, yeah. The main driver of the Kiwi negativity that came in the wee hours of Saturday morning, and it relates to USChina, that old chestnut. So headlines that the US intend to block Huawei from shipping chips to the US, and reports of China eyeing up Apple and Boeing and a couple of other big names as retaliation targets. Yeah. So over the past few years, I guess, the Kiwi hasn't really fared well on anything that could be inferred as US-China negative, and the weekend's headlines are, yeah, certainly a re-escalation of tensions, or highlight a re-escalation of tensions. The Kiwi wasn't alone in taking a tumble on the US-China story. The Aussie dollar also fell, but interestingly not to the same extent as the Kiwi. So Kiwi lower, Aussie lower, but comparatively higher. That means Kiwi-Aussie cross lower, 92.38 Aussie cents. That was the absolute low in the cross. Lowest level since November. Yeah, the other Kiwi crosses, all lower, but not new 2020 lows lower. Yeah, firsthand, I will have a table in there with all of the Kiwi currency deets for this morning. Matt will have that sorted for you. Yeah. Bigger picture, okay, equity indices, bit of a wild ride there, especially in the US. Opened lower on that US-China story. Some pretty soft retail sales data didn't really help, but word of a $3 trillion support bill passing the first legislative hurdle that helped get the major stock indices back into the green by the close of play. That $3 trillion, far from a done deal, but it's something, yeah. Also interesting from the weekend, post-close weekend, the Bank of England have borrowed maybe a couple of pages from the RBNZ's pandemic response playbook. They are looking at apparently negative base interest rates and expanding the pool of assets that they'll accept for their bond buying Kiwi program. Yeah, early days, but yeah, that might prompt a bit of movement in the pound today. Okay, I think that is enough for me. I could go on and on. Wrapping up, it is a Canadian dollar holiday today. We don't really have a lot in the way of data. Japanese GDP around lunchtime. That's about it, I think. Oh, first view. That's the weekly from Kiwi Economics. That'll be winging its way to your inboxes later this morning. Included in there is an FX piece penned by Hamish. Just sits over there. Specifically looking at the current Kiwi drivers, so where we expect the Kiwi and the Kiwi Aussie to trend this week. Good times. Yeah. Okay. Stay safe. Be kind. Ka kite anō.